this is Bryan Burnett with RE/MAX First Realty. Welcome back to my real estate video blog. Today's topic has to do with 1031 exchanges. With tax season and with capital gain taxes rising, a lot of my clients have questions about 1031 exchanges. So I'll share with you just some basic rules and facts about 1031 exchanges. Now, a 1031 exchange is basically where you sell one property and you purchase another property, deferring your taxes to another time. So you don't eliminate taxes, you're just deferring them. Now, anytime you do a 1031 or you deal with taxes, always consult your CPA and your accountant. Now, over the years, I've done a lot of them for clients, and there's some basic things that you need to know. Number one, you have to buy like property for like property, meaning real estate. If you sell real estate, you need to buy real estate. The second thing is it needs to be equal or greater value. So if you buy something that's less value or less price, you have to pay taxes on that difference. The next thing you need to know is you have to use a facilitator. Now, there are 1031 companies that specifically do that for you. Also, your title companies will typically do that for you as well. That basically, what that means is when you sell your property, you can't ever touch the proceeds. Somebody else, the facilitator, has to hold that money until you buy your next property. If you touch any of that money, it then becomes taxable. The next thing is you have, from the time that you sell your property, you have 45 days to identify which property or properties you're going to purchase, and the facilitator or the title company will help you do the paperwork to make sure you do it right. The last thing you need to know is you have 180 days from the time you sell to purchase the property or properties that you're going to be purchasing. Just to give you a quick story, I had a client who owned a duplex for 24, 25 years. It was paid for, just bringing in cash flow. We did a 1031, and here's why. Because when you've owned a property for a long time, you're not getting those big tax advantages through depreciation, which is another topic. What we did is we sold his duplex, and we did a 1031, so we had a facilitator hold the money. I found a really nice fourplex, so it was a lot bigger, it was a lot newer, nicer, and we did a 1031 and bought that property, which was really nice because he was able to increase his cash flow, have nicer, newer units, so he had less maintenance, and he was able to then start depreciating at a higher price, save tons of money in taxes. We made the whole transition tax-free, or deferred the taxes on a 1031. Honestly, it makes making this client a lot more money. His financial worth will be a lot more than if he held on to that duplex. It's a great tool. If you have any questions, call me, 435-705-3029, and I look forward to talking to you next time.